Good evening, guys and girls. Good evening. A big warm welcome. My name is Adam Harris from Trade with Precision. And just checking that you have good sound. You should be able to hear me. What? Let's forget about that for a second. But you should be able to hear me loudly and clearly. And so I just want to check if the sound is good. Everything looks good on my side. Hello, Diana. Very nice to see you again, or at least I guess to engage with you again. Great, thank you very much, guys. So the topic tonight is the US dollar and Forex. Will it dominate or disintegrate? This is a great question because one of the things that you will encounter as an experienced trader is that there will still be moments where there are one of two possibilities that can occur in the markets. So it's a funny thing, but in order for me to get you guys to consistent trading profits, I have to start to describe the scenarios that you will encounter. And eventually that will just start to make sense to you. So there's a risk disclaimer. For those of you who don't know me, I am based in London in the United Kingdom. I trade my own capital. I trade for a few select clients, not a solicitation, just giving you some background info. I am a trend-based trader. I am more price action and support resistance based than anything else. I believe in technical analysis. That is what has served me very well from the moment I decided to trust it, I guess, is the easiest way to put it. So on the agenda today, we're going to talk about recent price movements of the euro dollar, dollar yen, cable, which is GBP against the US dollar, and dollar Swiss yen more. We'll do some market analysis across multiple time frames and potential trades that may be arising. So this is great because every time I do a webinar with you guys, the market is in a different place, right? It's in a different state. And that's not necessarily a bad thing. You know, for example, we could go from one webinar to another and I could say to you, okay, all the setups that I was looking at in the last webinar, they've all, like all the things that were on my watch list, they were all set up. Or we could review how those things played out. But what I want to talk to you about tonight is I want to give you some perspective first. Okay, so again, I'm not going to repeat myself too much because most of you probably can. Can you tell me, do you get an email that tells you here's access to the recording? Like, do you get any follow-up emails that give you access to the recordings, or do you have a way to access the library of recordings? If you don't, let me know. Okay, so basically what we need to do is the biggest difference between longer term market movements and shorter term market movements is that they can often have nothing to do with each other. So please understand that when we are trading and we are day trading, ladies and gentlemen, this is a tough thing to kind of buy into. We are only concerned with what happens today and this week. Like, I'm only worried about what are my trades going to do today and this week. Next week is a whole new week. Next week I can start from scratch. So, and this is really important because this mindset is something that you have to adopt, which makes you trade more in the now. So, for example, it is possible that a stock price could go down for a few weeks and then up in the long term. So you can have something that goes down when you expect it to go up, and it does continue to go up, but it's more about when it goes down and when it goes up. And so, but with trading, the problem is we're not buying and holding. We need to take advantage of the movements as they occur. This is really, really important distinction. We need to take advantage of the movements as they occur. And one of the best things that we can do as traders is to talk about, even if it's just to ourselves. Imagine that I promise you the benefits of me when I do webinars and I do analysis to you guys, I get something out of it because I can't, excuse my language, but I can't bullshit. I'm not, like, I would be embarrassed if I lied to you guys and said, well, this is what I think it's going to do. I have to tell you what it tells me it's going to do. So what I mean by that is the difference between let's say I'm in a trade. Let's say I am in a gold trade and I want it to go up. And I'm analyzing gold for you guys. I can't, if it looks bearish, I have to tell you guys it's bearish. I can't say to you, oh, it looks bullish because I have a position in it. So for me, all these webinars are great because it gets me into a very objective state of mind where I am accountable. My analysis and my thoughts are accountable to other people. And so you will ironically always be getting the best kind of analysis out of this from me. So let's just have a look at euro dollar. Okay, so euro dollar has been in a range. We've had a very, very strong dollar, and this is covered in previous webinars, which is why Kanemba, which is why I asked, I think that if you have not been getting access to the library of videos, I think you guys should send an email in to whoever your support contact is and say, listen, I understand that there's some great webinars that have been done. I'd like to get access to those, please. I think you should do that if you can. And if you really get stuck at that point, if there's just nobody cares about you and no one's gonna listen to you, let's just see what I can get out of this one. So then you can send me an email at this address. No, that's my personal email address. I want to do my work one, which is this one. So that's my work. Just send that one through to me, and I will then send you links to, certain webinars that I think you are in the recordings, which are in the library, which I think you should get access to. Okay, so yes, is trading a learnable skill? Yes, it is. Is it impossible? No, not at all. It's as much effort as learning a foreign language or learning a new sport or learning a musical instrument is. And I believe that most people on the planet could learn one of those three things. Therefore, I believe that trading is a learnable skill. But what we have to do is, the problem is that we have to separate. We have to learn to trust our own judgment. We have to learn to develop skills in reading price action. And that's part of the journey. So that's why my webinars with you guys are quite popular, because I present my case to you. You normally see what the outcome is the next week, so you kind of get a sense of how my analysis was kind of based, and then I'm sort of doing the same thing now. So one of the things that's important is that we have broken outside of the range that we were in. And where's my access to that level? Hello. Where is it gone? I seem to have lost my. Interesting. Okay, I've lost my ability to edit this bit. That's really weird. Hold on. No, it's nowhere here. Okay, that's very odd. So let's just kind of carry on for now. Otherwise, I'm just gonna, what I'm gonna do? This is so weird. I'm gonna just restart it. So let's go through here. I think it's somewhere on one of my multiple screens, but I can't see it. So I'm just going to kill it here, which is the MT4. Sorry, guys, a bit embarrassing. This is weird. There we go, MetaTrader 5, sorry, there we go. Close you down and restart you. I think what happened was that somewhere there's a window open and I can't see it. And it's not, I can't see it. Okay. So the thing that we need to know about the dollar, because I don't want to bore people with the repetitions from previously, is that we need to understand that all around the world we have inflation. And the usual go-to for central banks with inflation is to up the interest rates. That has always been the case, going back 100 years ago. That has always been the case. But where they have started to sort of, excuse my language again, cock up, it's kind of, I think it's important to kind of emphasize what's changed. Is I would say since 2000, I would say that our politicians have become more susceptible to, they're kind of more business aware. They want the economies to thrive, and so they've got to a point where they're starting to up the interest rates too late. What should actually happen is that when the economy is booming and doing really well, you should start to up those interest rates. So what you're trying to do is, as the cost of things are going up because people are earning more, and there's more of a supply, and then you get inflation, which is normal, by the way. Very, very important that we understand that this is a very normal thing historically that we have. Every time the market corrects, there's always an inflation issue, always. So even though everyone's talking about inflation now, please understand that the next time, which could be in 10, 15 years time, we have a correction, inflation will be the topic then. So understand that basically it's standard that every time the market is doing well, people start to maybe get a little bit richer, or maybe salaries start going up, and then people start to spend more, and then inflation happens. So that's just a normal part of the kind of summer and winter cycles that we have. So when we look at the euro dollar, what we have is that the dollar, because the dollar is the biggest cog in the system, it makes up like 90% of all the transactions on the planet. So forget about the pound, forget about the yen, forget about all these different things. The dollar is just, it's titanic in comparison to the other pairs, and most people don't know this. So you know, the next biggest currency traded against it is the euro dollar, which is made up of a whole basket of other countries together. And even then, they don't really necessarily, they're not compared, they can't be compared to the US dollar. So the reason I'm telling you this is that as it happens, as inflation is happening, we look at the central bank, we want to know what the US is doing at all times. It's not just what our government is doing. We always want one eye on the US. We always want one eye on whatever is going on in the biggest market in the rest of the world, because that can impact us. So we want to know it, but it's normal for central banks to start to raise interest rates. If we go ahead and have a look at the Ftse in the UK, to give you a sense that you can actually see, I mean, if you kind of look at it, we are within a range that we have been in going back to, what's that, 2016. We kind of had a drop down. We're back in that range. We look relatively bullish. And this is another thing. I want you to do two things at the same time. It's kind of like, I don't know if you have someone in your life that you love but don't trust. Like, if you can just work with me on this. If there's somebody that you love but you kind of wouldn't quite trust them, it doesn't mean that you love them less, and it doesn't mean that you don't want to trust them, but it means that you have to do the two things at the same time. So we do the same thing with the markets. We trust that the market is communicating all the time what it wants to us, because, to be honest, all the orders that go through that are actually realized, those orders are placed, start to produce or print candlesticks. And the beauty of that is that the candlesticks never lie. But at the same time, we can't necessarily, we should never assume that if the market is bullish, that it's going to succeed in its next move. So it's a catch-22. As traders, we know that our job is to trade. If you're looking at a move like this and the move pulls back, your very next highest probability move is probably a move like this. And although we put money on it, we also at the same time have accepted the possibility that the market could fail to do that for us. This is really important. You have to accept. It's the same way if you had a basketball now, guys, and I put you with a hoop in your driveway, and you had been the whole day just throwing ball through the hoop, so you were doing really well. Just, you know, you could almost do it blindfolded. You still know at the end of the day that there's not a guarantee that it's going to go through the hoop if you throw it. So that's what I'm getting at here, is to understand that you've got to look at what the market is giving us. So basically, because of inflation, the interest rates have gone up, and as a general rule, whenever interest rates go up on a currency pair, that currency pair strengthens. So we've got inflation, which has caused the Fed in the US to up the interest rates, which has caused the dollar to strengthen, but we've already had the dollar strengthening over the previous year. Now, it's possible, again, it's possible that some of that move, or the majority of that move, is driven by inflation. Like, it's driven by all the stuff that we're hearing now. But you know what? We've had this period in the past. We've had the euro strengthen, or the dollar weaken, and the dollar strengthen, and the dollar weaken, the dollar strengthen. All we're really doing is determining what happens now. So the dollar itself, which is important, I believe, is that we have parity, which is down here at the bottom, is actually a really, really major level. The most, you see, I've hung it again. I've done the box has gone somewhere, and I've done something stupid with it. Let me just, I found it. It was underneath one of my other things. So this here is parity. This is the euro dollar against the US dollar, and actually, if you historically, it very rarely has managed to break through that. And I would kind of want to highlight to you, I did this the other day actually. This line here is approximately where retail traders such as you and me, successful traders, beginner traders, all alike, started to get access to the ability to trade the currency markets. Prior to that, for the most part here, all of this movement you see in the markets was done by banks and institutions. This was not a retail market. It only really kicked off in the 70s. And this is really it. It's a very, I didn't realize this. I didn't appreciate that it's a very new baby, and that actually until 97, it wasn't even available to the public to trade. And I was only tinkering around with learning how to trade in 2007. So it's really new. I mean, if you're like me and you're maybe born in the 70s or maybe the 80s, you'll realize that actually the 90s is not that far away, and neither is the 2000s. So I bring this up because here's my parity at the bottom. So I'm just going to change the color of it so that you can get a sense of what's going on with the, we'll just pick that level as a key thing. That is so this level, you can see in the past that we've kind of rejected it. In most occasions, we've kind of just sliced through it. There's a rejection there. We've gone straight through it there, gone straight through it there, gone straight through it there, rejected it there, gone through it here, gone through it here. So the kind of, it's not completely crazy that we would continue to see the dollar go through this. The very fact that we are close to parity means that that something's on the, like, in other words, whatever caused us to get to this point where the dollar was this strong and we're at parity with the euro wasn't by accident. Chances are that the conditions are potentially ripe for us to continue through this. So it is, I want to first of all accept the scenario that we could see the market move through this. So the next level down here is probably around 0.967. That's probably, if we continue through, based off the idea that we most of the time have gone through this, it's very rare that we've rejected. Here's a rejection, and there's a minor rejection. Otherwise, you know, we've always continued to go through it. What does it mean in terms of spending or for our economy? You know what, we're going to muddle through. Honestly, we are going to muddle through. No matter what it is, every 10 years, we're just generally going to muddle through. But what it does mean is, it means for tourism and a few other things, we're going to see some more expensive costs, and maybe for imports and exports. And this is an interesting thing. There's an amazing video called the Dollar Doom Loop. This is a fascinating thing, guys, where the problem is that when the dollar, if it's a major exporter or importer of goods, is that if that dollar gets too strong, it starts to eat away at their economy. It starts to become bad for them. And so there is definitely a case to be made for the dollar to get weaker. And I can say that for sure. There's absolutely a case that says the dollar can get weaker from here. The only problem I have with it is that we've broken outside of this range, which we've been in for a while. Parity, the next level down is about here once we get through parity. And generally speaking, it tends to continue through with that. So we had a big move here, for example. If you go kind of back in time, I was around when we did this. We sort of had a level like this, which was 1.23, and the market ultimately broke through it and moved all the way down, and then we've been range bound ever since then. We've finally broken out of this to the downside. It is possible we could see, you know, the least likelihood, but still possible, is a reversal and see price come back into the ranges here. It is still possible. However, based off the fact that most of the time, sort of let's call it 70% of the time, the market tends to keep going, this is where I would expect the market to ultimately continue to push through, at least through below parity into this next level, and then we could see a bit of a pullback. So that's my plan A. My plan A is to see that this is going to continue to go. If you look here within the weekly, we've got a relatively stable price action. We've got a relatively stable trend. But in all honesty, this is what I would have expected. I really would have expected the market to pull back to here before it continues down. And I still think that's a possibility. We can see here the MACD is trending lower. The accumulation distribution, I've just stuck that on recently, is kind of trending lower. I really would have expected price to pull back to this area, which was a level of support, find resistance there, and then continue down. The fact that it's wobbling a bit at the moment kind of makes sense, because part of what you need to understand is that if we go to the daily, please understand that the dollar really doesn't know where it wants to go. We're stuck in a range, and it really doesn't quite know where to go. So in my opinion, I'd really like to see us pull up, have kind of corrected all the way back up to this area, which is around about actually 1.035, 036. Around about here, there somewhere. 037, actually. I'd really like to see us do that before the market continues down. But the market could be so weak now that it's really struggling to go through, and therefore I would say a break below these lows could see a continuation back down to parity. And so we're kind of in a moment where, as odd as pathetic as it sounds, there are multiple potential outcomes here. And this is genuine. This doesn't matter how good you are at trading. This is the potential outcome. There is a possibility that we could come up to this area and then continue down to parity. There is the possibility that we could come down here, double bottom, and then reject it. Those are multiple possibilities within the realm, I guess, of where the dollar could ultimately go. Is the dollar overextended? Yes, it is. Does the US want a ridiculously strong dollar? No, they don't. All I'm saying is that there is actually an equal possibility for a stronger dollar as there is for a weaker dollar. So how do we trade this? Well, the problem is we need, first of all, to recognize there is an issue here. We need to recognize that the dollar isn't really going anywhere, and therefore trading opportunity. Can you hear me now? Sorry, how long ago was that? 23. Okay, good. Okay, cool. I moved my microphone and I think I hit the mute button. There we go. Okay, cool. So sorry, let me recap that. So there are going to be equal arguments for why we should get a weaker dollar or a stronger euro. Don't worry so much about the other currencies, because if the US dollar has decided whether it's going to be strong or weak, that will move all the other currencies out the way. Now, when the dollar doesn't know what it wants, then we'll see, you know, the euro's a bit stronger, the pound's a bit stronger. But right now, everything seems to be about that US dollar. And you really have to appreciate that it honestly is such a big kind of cog in the system. So what I wanted to say to you though was that right now we really don't know which way it's ultimately going to go, because there's an argument for a weaker dollar. It's overstretched. It's definitely if we look at it from a monthly perspective, it's definitely overextended. It could be worthwhile coming back into the moving averages, even if it's going to carry on down. From a weekly perspective, it still should have come back up into these lows, I feel, back into those previous lows. So I still feel like it's got a little bit further to go, but it's at the same time has also produced a bearish candle. If we break the low of that, we're likely to see it hit low. So we really are getting conflicting signals. It's not just my opinion. So let's go and compare this to a few other charts. What's going on with the other charts? So what does sterling look like? So let's look at that on a weekly basis or on a monthly basis. So on a monthly basis, we're back down at these lows, and you can see we had a bit of a rejection there, but the candle hasn't quite moved away. So look at it from a weekly perspective. We've still kind of in a bit of a downtrend, producing this bearish candle in the moving averages. You'll see we come back to the moving averages, and then we carry on down. We come back to the moving averages. If we break the low of this, we're likely to carry on down. We're still sitting within this range. Let's look at Aussie dollar. So Aussie dollar, if we go back to that monthly, we're sort of sitting at a major level. We've got a very nice bullish candle here within a downtrend. We've broken the high, but so kind of like there's a possibility for it to move a little bit higher, and I'm going to do the same thing here with Kiwi dollar. Okay, so Kiwi dollar here is generally still trying to stay above this support level. So all of this is to really show you that you're not crazy, because this is something that can happen. You're busy trading the markets and you're like, Adam, I've had a whole lot of losing trades, and you have no idea if that was you or the markets or a combination of things. What I can tell you is this. This is the way to approach it. If you have one strategy that you're applying, and that strategy is supposed to be like a 60% win ratio, or win ratio, which means that 6 out of 10 trades on average should be making money, and you've had 10 trades like that, and they've been losing trades, then in that situation, either the market conditions are acting funny, or you're out of sync with the markets, like generally speaking. And so you need to determine which way. Now, all I can tell you for this for sure, which is the best advice I can give you, is that if your daily has got a whole series of candles in the same area where there's basically a range, then it's not you, it's the market. It's not the market, it's not you, it's the market. And you won't know that. Sometimes during the day, you're like, what the hell's going on, man? And then it's only a few days later, you look back and go, oh, woof. And I don't know how to tell you this, but at the end of the day, we will always get clarity on what was going on during the day. During the day, we have to trade it as we have to, a golf expression, play it as it lies. But at the end of the day, we're going to have to kind of, we'll only get clarity on that at that point. So here it's a mess. Whereas there was generally trending down, there it's really good, there it's really good. We've got, if you've got your daily bars that are doing this, that's great for intraday trading because you know which way to go. It sounds like an oversimplification, but it's very important. Whereas if your daily bars are doing this, you are buggered. All of us are. We're kind of struggling a little bit there. So we go to the 4 hour, and the 4 hour doesn't really know where it wants to go. And the problem with this is that no matter which way you trade, the market can change direction. So whether you're a seller or a buyer, I could sell now, think it's going to go down, and it can go up. So there isn't any assurance. Whereas when it's in a trend, there is some assurance that it's going to go in the direction of the trend. Okay. So again, if we go back to this, we look at sterling. Sterling has had a nice move up and a nice move down. If you look at it from a weekly perspective, we've got that nice little bearish candle. And technically, this isn't the implication here is that we're going to hit lower. Technically, that is the implication. The only thing that I would counter to that story is that we have a level of support here. So we've been moving down for a while. The dollar is overextended. Maybe we'll get a bounce from it. So there are times when I can tell you with a high degree of confidence what I expect the market to do this week, like in each coming week. And there are times when I'm going to say to you, you know what? It's not giving a clear picture. So generally speaking, when the market is very, very strong and trending well, I could say to you, my expectation is it's going to pull back up to here, produce a bearish candle like it did there, and continue down to the downside. This one, unfortunately, has stalled where it is, hasn't pulled back up into here, which is where I think it should have pulled back to as a minimum, I might add. And if you do Fibonacci measurements, nah. Right, where's the window gone now? There we go, let's bring it over here. So here's where I would have expected it to come back. It's a nice 50 fib level or a 3, it's struggling at the 302, but I really think a 50 fib, because it's, sorry, let me explain why. Because it is so overextended to the downside, there's actually more of a need for it to come back up further. Okay, so it should be coming back up to here, even as far as the 618, and it's not. That is, I'm just saying that is, it's a little bit weird. It's overextended. It really needs to come back to this level. Why is it not doing that? At the same time, we've got this major level of support below us. So what I'm going to do is I'm going to call it now. I believe that there's a lot going on right now. We need to, this level could be the bottom, and we need to break above this level to go long. So we're stuck in this purgatory of not really knowing what the US dollar is going to do. And we'll need to see this on euro dollar, pound dollar. You'll see it on gold. It's not just this. When you look at gold, for example, you've got a strong dollar. You're range bound now. So now you're in a downtrend. Gold has come back up to this level. So the dollar's been one of the key things that moved it down. If we go through and have a look at West Texas oil, US oil, we've come back down. So the reason I'm telling you this is the driver, that strong dollar has been a really strong push. It's added a big push down for commodities, for certain currencies. It's driven a lot of them, and it has also been as a result of the correction in the market. So when we go back to that monthly correction here, we have a very strong correction here, and that has created a stronger dollar. So it's self-reinforcing. But during July, we got a bit of a pushback on this, which is the same, by the way, as the correction. It's the same as this correction here. If you go back to the monthly, we've had a little bit of a correction here during that same period. So the two are connected. It's not always the case. They're not always connected. They just are at the moment because of the inflation, which has led to rate hikes, which leads to a stronger dollar. So quickly, while we're on the markets here, what do I need to see to know that the markets are changing trend and going back up to a bull trend? When we go to a downtrend, we get a change in high lows, higher highs. We break previous highs. So we need to produce higher lows and higher highs to have a confirmed uptrend. We also need, very important, to start breaking previous highs. So those are features that we've started to do. Here's our most previous or most recent high on here. We need to break that. And we need to produce a clear higher low, higher high signal. And finally, you will see that here, and for those of you who know me, you will know all about this. We are above the 50-period moving average. It's a general rule, guys. It's a general rule. That's very important that you apply this to the weekly. It's a general rule. When we are above the 50, we are generally in a bull market, generally. While we are below the 50, we are generally having a correction, but you could say that we are not in a bull market. So here's what I need to see to definitely feel confident. I need to, first of all, break this previous high on the weekly. I need to secondly see a higher low and a higher high, and I also need to break above the 50. If we can just do those several things, get a fresh high off here, get above the 50, and produce a high low, higher high. If we can get those three criteria, we then qualify for this. We then back up above the 50, and the probabilities of us going back up into a bull market are very high. And because it's a weekly chart, guys, we need several more weeks of this, which means that I can tell you with absolute certainty now that we most likely won't get a confirmation of this status of the market for at least, let's say, 3 to 4 weeks. At a minimum, I need that many candles to get above that 50-period moving average. So your weekly US index that gives you a 50-period moving average, standard average, until we get above that, we're not really back in a bull market. So I want you to just keep that in mind. As long as we're below that, we could still see the market do another leg down. We could see it happen. It's normal. It's very normal. It's a buying opportunity if you want to invest in stocks, because you're seeing a nice correction when the monthly chart, or when it's had such a boom period, we're finally getting a bit of a correction. We're getting prices cooling down a bit. But when we look at it from a euro, from a currency perspective, it is connected at this time. That as long as the US continues to see inflation, and as long as they increase the rate hikes on the US dollar, it is reasonable to expect that the dollar will strengthen, because that's what happens. And if we get, maybe in the UK, we also get interest rate hikes, we could also see the pound strengthen. So therefore, it is also possible that in the UK, if we look at it from a monthly perspective, we could see that this is still the bottom of our range, and the market ultimately ends up going to that. That could happen if we get a little bit of dollar weakness because it's tired, and we get a stronger pound as a result of inflation or interest rate hikes from the Bank of England. That would create a stronger pound. We could see this turnaround. So that is a very normal scenario in which we could see this happen. But I do want to suggest that we are possibly within an area that we haven't been in before when it comes to the euro breaking below this level. Unless we reverse where we are right now and come back into this, and that turns out to be a false breakout in the same way that that was, it's a possibility. But I would say that historically we tend to go to parity. The reason that we got to parity means we're in quite a bit of trouble, and we tend to kind of over bounce it and keep going. So my plan A is to accept that there is a very strong possibility the dollar will continue to strengthen, but at the same time recognizing that the weekly chart could do with a little bit of a, in the medium term, we could still do with a bit of a weaker dollar before it potentially resumes the next leg down. So each leg down, ladies and gentlemen, has been about a month to a month and a half. It's not a small, so we could have a couple of, we could have a month back up and then another month and a half to the downside. If we find that other countries, the pound, the Eurozone, and Bank of England start to increase their rates, they start to rate hike because of UK inflation or European inflation, we could see the euro strengthen and the pound strengthen, which could lead to us potentially coming back into this range. It is a possibility. The price action will confirm it, so you'll know, should this dollar come up here and forget about these levels, just go straight up to here, break above that high. If that happened, then the most likely scenario in that case is that we've come so far back up that the most likely scenario is we're back within this bigger range. Does that make sense? Cool. So guys, just because what I've got you here is all of this making sense to you here? I'm a day trader. So I want to walk you through how I take trades now, but I'm also trying to show you what my bigger picture awareness is. We really won't get clarity until we could break out here and then come up here and then carry it down, or break down here. So this is right now why it's not worthwhile. It's really not worth my while to trade anything that's going sideways. When I first got started, I paid a lot of money. It was like £20,000 for my first trading course. It was like a year-long thing. It was an insane amount of money to spend. And then 2-3 years later, I spent on another program which fixed all my trading, and it cost me about $6 grand. But the point is that I don't think I would have appreciated how good the second program was if I hadn't done the first, but the point is that second program was Trade with Precision, and I'm now part of the team, and I'm now showing you all the areas where I kind of needed to focus on those things. So the question that's coming now is, due to the month of August, people being away on holidays, might that affect price? That is absolutely a consideration. It's not impossible that when everyone's away on holiday in the US and the Northern Hemisphere, it's a big Northern Hemisphere thing, that we could see the market go into a bit of a coma. Does that mean that the market is definitely not going to move? No, it doesn't mean that at all. There's a couple of other things we need to take into account. The US has got some major elections coming up in November, and that there could be an impact on their dollar in the run-up to November. We've also looking at the markets, and if the markets are going to strengthen, if they're going to recover from here, we're going to potentially see a weaker US dollar. So if August, the expression is go, sell in May and go away. This period is particularly crazy. Everyone's away on holiday and they start to come back around about August, September. We start to see the market potentially, whatever it's going to do, move up again. So I guess to me, the best answer is, let's watch and see what the price does. In other words, I'm not going to pretend, I'm not going to just assume it's going to do that. I'm going to watch and see if it does that. But I can set an alert above here and an alert below there. And if it breaks either of those, then that will bring me back to my machine to say, okay, I feel like we've got to move into the market. Because if you think about it, we've got inflation. It's still a problem. I don't think the inflation is going to go away. Let me explain my logic behind that. Not a skies falling pessimistic view. I don't mean that. What I mean is, part of the reason we have inflation is because of COVID and the Russia-Ukraine war. That's definitely put a pressure on supply chain issues. People have been staying at home. They want to spend a bit of money on their house. They want to, and people have negotiated better jobs. People are revisiting their jobs. People are earning a little bit better. Not everyone, but many people have got better contracts than they had before. So then they start spending a bit more, and so we can see not only due to Russia kind of tightening down on things, but the general supply and demand of kind of things going up. When I go into the home base or B&Q, I see a lot more people now trying to fix up their homes and buying stuff than they were before. So the thing is that I don't think that's really gone away. I think that people are starting their really good, well-paying jobs. This is my opinion, by the way. They're starting their really good, well-paying jobs now. And they actually still want to spend a bit more. They want to book holidays. Think about it. How many people haven't been able to go away on holidays? So they want to book all these holidays over the next 6 months, over the next year. Flight prices, ticket prices have definitely gone up. So this is what I think. I think that at least for the foreseeable future, anywhere from 3 to 9 months, most of the people have already made their expenditures. They've already decided, I'm going to spend my money on this and this and this. This is not based on data. It's based on more anecdotal stuff. You guys can contribute here as well. So then, and I think therefore I kind of think that the expensive cost of flights and stuff are still kind of going to be in play at the moment, and therefore we're not going to see inflation subside a lot. We are seeing people, okay, the cost of stuff at the shops is expensive, so I'm going to maybe trim my shopping down. So instead of spending 150 quid on $100 worth of stuff, I'm now going to be spending 150 quid on $200 worth of stuff, meaning that people will go to the shops and spend a bit less. They'll, make sure that the budget hasn't changed. So in that respect, I think we're going to see people spend a little bit less, but I don't really think we're going to see an overall drop in inflation anytime soon, because a lot of people aren't really suffering necessarily at this time. Sorry, let me be clear. Many people have got good salaries. They're doing okay. They're not really too worried about the cost of stuff now, which is why the cost has gone up. But when it gets to a point, then it's going to be a bit problematic. Okay, and some people, sure, some people aren't earning any more now today than they were 3 years ago. So if you're in one of those places where your income hasn't increased, this isn't going to be great for you. But I do like anyway. So the point of all of that means that inflation is going to drive any country's central banks to up their interest rates if that's what they're going to do, to curb the to stop lending and to get people to pay off their loans faster and to kind of cool things down. And actually that can happen for both of us. Right now, in terms of the dollar as a day trader, what am I looking for? So for example, this purple box tells you exactly where my problem lies. I can trade it up to the top from the bottom. I can trade it down. It's all over the place. It's not really ideal. Some of the best trends I've seen at the moment, for example, would be on random things when you look at stuff like Swiss yen. So if I go to Swiss yen and add that as a chart and look at that from a monthly perspective, we've got a beautiful, beautiful, beautiful trend to the upside here. It's kind of coming into an old price level there. It's pulled back, produced a nice bullish candle, but this area is problematic. You can see it, guys. I don't need to tell you why. We don't need to know why. But this area is problematic. You can see it here. So I need to I want to be cautious. How do I know when this area has become less problematic? Is probably when my weekly candles have started to close up near the highs. So when a candle is closing near the highs like this, it's a very good sense of confidence. The market is closing at those levels. But if it's trying and failing, which we've seen in some of these areas. Where did I see that? Was it CAD yen? No, it wasn't CAD yen. Somewhere else where I saw dollar CAD? Dollar CAD monthly. Look at this up. Look at the wick reactions in this area. That tells you a lot. I'm not sure what's causing it, but it doesn't matter. As a trader, when you're done a chart, just loading up the data there, take your time. It's not like we're all waiting on you. Are you sure now? Okay, there we go. So you can see wick, 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 a series of wicks. In fact, it's unusual. It's unusual to see it here. It stands out. What this tells you is that it's encountering resistance to the upside. In other words, it's not natural for it to do it. Doesn't mean, in the same way the cost of living goes up, even if we don't want it to, it just keeps going up, but it's definitely encountering resistance to the upside here. So I wanted to show you this because that communicates quite a bit to you. It means that I wouldn't, if I was going to buy now, even though I can see it going up, I wouldn't buy now and hope to take profit up here, because this behavior tells me that there's definitely a struggle going on above, this kind of level. So what I'm looking for generally is going to be when there's a really nice healthy trend like this. So I'm going to go back to Swiss yen and have a look at this. You can see, generally speaking, a little bit of a struggle here. We pull back. Most of the time it looks good. The MACD is climbing. Everything here looks okay. So the trend is relatively nice and strong. So there are some good trends out there, guys. There are some good ones. It's interesting to me. Not all of them necessarily. Look at this. You can see here. Kiwi CAD. Let's have a look at a few of these other ones. Kiwi Swissy. I'm trying to find stuff where there's a very clear trend. Okay. Kiwi yen, you can see there's no doubt. There's definitely a problem at that price level. Something's going on. It just can't get past that. We've got a series of higher lows. Maybe it'll break out, but for now, it's very dangerous for me to trade that. So what I would like you to take away from this, first of all, is that the market will give you an indication of which way it wants to go, and then you have to start paying attention to see if it's succeeding in that actually happening. So for example, here, if we look at these charts, we look at it from a monthly perspective, we can see the prices pull back to the old highs, produced a bullish candle. We've broken that high, so we've produced a swing low here. Generally, if you take the whole history into account, it's generally tends to keep going. This is how bad it was during COVID. We've had a nice strong correction here. There's a lot of there's a lot of cases to be made for this to go, that it can now go back up to the old highs. Forget about what you're hearing in the news. When it's coming down here, all we heard was doom and gloom. When it's up here, we hear nothing but good stuff. When we're here, we hear nothing but doom and gloom. So the market, it's always going to recover, and then we'll see the numbers improving, and then we'll adjust our opinion. So all I'm saying is technically we've seen it pull back here, produce a bullish candle, go, pull back here, produce a bullish candle, and go. We've pulled back, producing a bullish candle, and to potentially to go back up to these old highs. So we need to see how that's going to play out. And so I want to see what happens. I'm looking for this on the weekly to start breaking above these highs, get above the 50-period moving average, and then it's going to be nice and bullish. I find it unlikely, by the way, that the dollar will continue to strengthen if the market continues to climb, because the whole reason the market corrected was we had inflation, interest rates went up, the dollar strengthened, and the market kind of let off some of that steam. It doesn't make sense that if we still have inflation issues and we still have a strong dollar, the market can somehow go up against that and just reverse that whole thing. So my point being here is that I do expect the market to continue. I think that if it can continue and break these highs, that is more of an indication that the dollar is going to weaken rather than anything else. So in other words, I'm looking at two things, and I want to see whichever one of them moves first will be the clue as to what the other thing is going to do. So if we start to break above these highs, then I think we're going to get a weaker dollar. And if that's the case, and we get interest rate hikes in Europe and in the pound, we're going to start to see the euro strengthen. We could genuinely see this start to reverse from where it is here. But the most important thing to acknowledge is this range. You're not going to get clarity until price breaks above this range or below this range. The next thing we can do, just for the sake of education, is look at all the euro pairs. So let's look at the euro. Is the euro on the weekly chart trending lower? Yes, it is. What about euro GBP? So now we're going to look at the euro against other currencies. Well, it's kind of range bound at the moment, actually producing higher lows, higher highs, might even be climbing. So the euro is strengthening sort of in a very sloppy, messy fashion more than the pound. What about Euro Aussie? Euro Aussie is kind of range bound at the moment. We're generally coming down, lower highs, lower lows. So it's bearish, range bound. Euro Kiwi is now pushing back up and coming back down. So this is very swing-like range bound behavior. So this implies the euro is not that weak against the Kiwi. Euro yen is up here, producing a nice bullish candle off a level of support and resistance. Check this out. Beautiful test of that, and this is perfectly acceptable. Price can come back and test the level twice, just like it can test it 2-3 times from below. It can test it twice from above and still continue up. So this still looks bullish. So we've got the euro strengthening against the yen. What's going on with Euro Swissy? So Euro Swissy is very bearish, guys, very bearish. Downtrend, needs to come back up. So we've got a weaker euro against the Swiss franc. So I'm showing this because we've got a euro weakening against the dollar, but it's strengthening against the Kiwi and the yen. There isn't really a unified euro position right now. Like here, Euro CAD looks nice and bearish. Looks similar to Euro Swissy and kind of similar to Euro dollar, but the rest are different. So it isn't just the euro. The euro isn't necessarily weakening across the board. Let's look at the pound. So what's going on with the pound? The pound here is in a downtrend, produced a bearish candle here, could head lower. What about pound Aussie? It's range bound, trying to reject these lows, but there's a bit of pressure on it. It's up at these highs now, it's broken these, it's in this range now, could potentially go lower. So that range bound, bearish. Pound Kiwi, range bound. Look at that, man. Don't know what's going on there. Pound yen, uptrend, nice little bullish series of candles, but definite resistance up here. So again, similar to the euro, guys, we have got different stories. We've got pound Swissy heading lower down here, but what about Euro Swissy? Euro Swissy also pushing down. So is it possible in this case that it's the Swissy that's driving those two charts? Well, let's look at other stuff. What about Aussie Swissy? Okay, Aussie Swissy not pushing down as heavily. What about CAD Swissy? Kind of pushing down towards the lows here. What about Kiwi Swissy? Kiwi Swissy pushing lower. So I would say that there's some Swissy strength because it's causing other pairs to trade lower because of it. Let's go back to the pound one. So pound Aussie, range bound. We did all these. Pound CAD. What about pound CAD? Pound CAD trending lower. So look at pound CAD versus Euro CAD. Look at this. Almost the same. So my point to you is that right now, aside from what the dollar is doing, the other currency pairs have kind of got their own stuff going on. You've got some of the Euro Swissy pairs, some of the Swissy pairs heading lower, some of the CAD pairs heading lower, depending on what they are. The CAD is quite strong at the moment. So we're getting some CAD strength. Let's have a look here. What does dollar CAD look like? Dollar CAD is kind of range bound at the moment. We're seeing the dollar sort of strengthen against the Canadian dollar. But what about Euro CAD? going down, pound CAD going down, Aussie CAD sort of trending lower, but not as bearish. Kiwi CAD going down, CAD yen just trending up. So we've got a strong CAD, strong Canadian dollar so far, except for CAD Swissie. Interesting. Now let me have a look at your questions. Sorry, trying to get my questions thing open. So Adam, what will be your entry trigger using EMAs when 50 and 20 crossed, or candlestick pattern and some price action? I know, what a great question. It's actually going to be all of the above, but let me kind of let me explain that. So let's say I do euro dollar. So for me, the kind of setups we look at here on this chart is when price is underneath the moving averages, kind of ping-ponging along. This is an example of a great bear trend. It doesn't matter if that's on your 1 hour or your 15 minutes or your 4 hours, guys. Same to the upside. If price is on top of the moving averages and it's bouncing really nicely, it's a great uptrend. So I want that in place. If you had to reverse engineer what does a good trend look like, that's what it would be. So the question is what would be my entry trigger using my moving averages, my MAs? Would it be when moving averages crossed over, or would it be candlestick pattern or some sort of price action? For the most part, ladies and gentlemen, it's going to be price levels, and either a candlestick pattern or some sort of price action is going to be the basis for the decision. What do I mean by that? If we have price coming down to a key level and then it changes direction, goes back up and then comes back here, and I see a nice setup here, it's going to be a price level combined with some sort of bullish price action combined with this, when you asked here, you know, candlestick pattern or price action. So price action will be bullish, but the candlestick pattern could be something amazing. It could be a double bottom, it could be a nice bullish price action stuff. That is really, that stuff is gold. It's always going to be the case. Even here, for example, there's an inverted head and shoulders, and then you've kind of got all these different patterns. So they're gold. They never go away. So trading, ladies and gentlemen, is about doing the simple things really well. It's not about building in 50 different things. You don't need Bollinger Bands and Fibonacci and pivot points and blah, blah, blah. It's too much stuff. You can start with just support resistance levels, moving averages to give me an indication of where price is going to be. So in answer to the question, I'd be looking at here, potentially we're right on top of those moving averages. So on the 4 hour, which is what I'd be looking for, I'd want to see price, ultimately, I'd want to see price start to break out. So it would break out of this range, come back to here. In that moment, the 10, 20, and 50 would start spreading out. And so I would get my moving average setup. I would get a beautiful level of support or resistance that's now become support. Then I'd be looking for a bullish candle. If we broke out of that, chances are that when price has been cooped up for a while, guys, when it finally breaks out, it likes to run. So then I would like to see it kind of pull back. Anyway, just pull back into the moving averages. It doesn't have to even come back to this level. If it's been really cooped up, it could just go like this and carry on. So any kind of pullbacks to the moving averages would be my very first setup where I'd be looking to go long, and that would be on the 4 hour and the 1 hour. Because why on those time frames? Well, because here's my first of all, as a day trader, I'm going to be taking trades on the 4 hour and below. So that's why I need to see the move on this time frame or any time below that. That's really going to be the case. And in that case, I'm always going to be looking for candlesticks behaving at key levels, and the moving averages will sort themselves out. So once the market is trending, the moving averages will automatically sort themselves out. Look at cable. Cable's a little bit different at the moment. It's trying to kind of go into a bit of a downtrend potentially. So yes, I could see the moving averages start to come down like this if the dollar is going to get stronger now, and we're going to start to see this, and then we would see this start to do this kind of thing, and that's what I would look for. One of the things that really does help is to try to describe a scenario. Try to say, okay, well, if price starts moving below here, I think it's going to start trending, and therefore, if it does start trending, I'm going to trade it. And so you describe a scenario, and if the market starts to unfold based on that, then you start to follow through on your plan. You can also say to yourself, but if the market breaks up above here, because this is a bit of a ping pong range at the moment, if it breaks up above here, then blah, 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 blah. So it's important because, ladies and gentlemen, if price goes above here now, Does that mean pound strength or dollar weakness? Well, the only way to know for sure would be to jump across to the euro dollar chart, and look at it. And if this is broken up here as well, so in other words, if euro dollar is broken up to a new high and GBP dollar is broken up to a new high, it's probably the dollar. You don't have to trade everything, but what you definitely want to do is get a slice of that movement. Adam, I felt like there was a different question here. Was there any other questions to do with that? So, you know, one period where I don't think it's always a good idea to trade is over Christmas. I really think that from about the 15th of December until about the 5th of January, you should take a break. Even if you don't feel like it, you can look at the markets and you can study your strategy and do all kinds of different things, but you shouldn't really be expecting the market to do anything. It might, but historically, most of the world's best traders are away from their desks for that period. And definitely over the last 10 years, I've never seen that being the case. But whereas with regards to the summer, where we are away now, I think you can still get some solid trends. But, you know, we've got stuff going on here. This might only kick out in September. It could be, it's possible, it could do that. There's no doubt it's in a range, doesn't know what it wants. And you know what, it's interesting. We've had some really bad periods in the past. Look at the daily. I don't know what this was. This was a nightmare. This was this. Like this thing didn't know what it wanted to do. Meanwhile, sterling was just trending nicely. This is a much better behavior, but this is driven by the dollar. So when you have one currency pair or two currency pairs that actually know where they want to go, you'll get a clearer trend. And that's why you want to trade them. When it's like this, don't trade the euro dollar because it's popular or because it's liquid or because the spreads are low. Trade it because the market conditions are definitely conducive to a winning trade for you. Take profit at 1-to-1 and 3-to-1, guys. That is our standard normal thing. The market doesn't produce anything more than 3-to-1s on a very frequent basis. It just doesn't do that. Let me just go have one more look at this stuff here. So we're going to talk about, yeah, we did that. We did that. Okay, so I really want to know what's going to happen because right now I think the dollar needs to decide which way it's going to go. There is an equally valid argument that it's going to go down to these lows than to these highs. The reason I'm not talking about beyond that is because by the time that happens, we'll be in another webinar. So for now, I just want us as a group, you and me as traders, to only look at what's going to happen in the near future. Let's just deal with a breakout down to here or breakout up to there. And then we'll do a webinar next week. And then we'll talk about what to do after that. Does that make sense? Don't, as a day trader, don't worry too much about the far future. The market can do lots of small moves between now and then. All right, before we end the webinar, are there any other questions? Is there anything else that you want to ask me? You know, anything you want to have a quick look at it in the next 30 seconds or so? Gold is looking relatively nice and bullish. Look at that nice level of support. Look at the monthly candle, looks nice, nice rejection there. Could it be going back up into this range? It is range bound, so it could do that. It could be working its way back up into the middle of the range, absolutely. You know, it's going to come back up. There's a level here and there's a level here, so we could see it do that. It is in a downtrend, so if it produced a bearish candle next week or this week in this area, then that could be an indication that's going to go back down to those lows, which is done in the past. But if it breaks up above this level, starts heading up towards here by the end of the week, or we get a nice bullish close above this level, then it's probably going to keep going. So there are always going to be times, ladies and gentlemen, where the market is sitting at a fork in the road, and as it's choosing its path, you will know which way it's going, but only as it's choosing its path. You can see that there's a fork. It's either going to carry on down here, or it's going to keep going here. And you'll only know if you keep watching in this area. In theory, any strong bearish red candles, rejection candles in this area imply it's going to go down. But any other ones imply it's going to hit up. So that's why there are going to be two things you'll never really have with 100% certainty. You'll never have 100% certainty about when the different timeframes contradict each other. So you've got a downtrend on the daily, an uptrend on the weekly, a downtrend on the monthly. There's never a 100% certainty on which way it's going to ultimately find itself. Okay. Usually there's the implication would be the higher time frame would be the one that wins out. And then the other thing is support resistance levels. When you draw your levels, you're never going to know with 100% certainty if that is the exact best place for it to be. And the beauty of that is you'll usually be right anyway. It's usually going to be in that area, and just with practice, you just start to leave it there. But that's it. Okay, what will be Bitcoin? You want me to have a look at Bitcoin, and then we're going to go. For whatever reason, it hasn't. It's putting the questions in a different order. There we go. H1 or H4. I would prefer, I can do H1 or H4. I would prefer an H1 entry if I can, in line with the H4. So the H4 is my direction. So like now my H4 is up. I would be looking for H1, even 15 minutes up, in line with the H4, always in line with the H4. Basically, when all EMAs align together plus some major levels, absolutely. And then Bitcoin. And that's it, guys. Then we're done. Blah, 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 blah. Listen, if equities are climbing, cryptos will also have a boost. They just will. They'll have a bit of a boost, a bit or a big. But anyway, here we go. Overextended, monthly perspective looks good. I like this one. Old high, producing a bullish candle here. If we break the high that, I expect us to hit up to these highs. If we look at it from a weekly perspective, we have a downtrend, so we have a contradiction. What's the monthly going to do? What's the downtrend going to do? But it applies to equities. So if equities recover from here, if you look at Netflix and PayPal, if they manage to recover from here, cryptos will as well. It's a technology. I know you might not believe this, but it's a technology stock. And what we actually have is a series of high lows trying to get into this level. If price can break through here, it makes complete sense to me that we would see it start to work its way back up towards 30,000, 31,000. So I'm not lost. We're not lost yet. We're sitting between this high and this low. We're sitting between that. So if we break, then we're heading away. Then we have a lower high. We have a lower high, but we don't have a lower low yet. As long as these levels are intact, so it can still come down to this level and then carry on up. Okay, so we're still within the current kind of uptrend. And again, if you watch equities, so if equities turn bearish, cryptos will go bearish. They just will, because they're tied together at the moment. Cool. Ladies and gents, I'm going to go back to this. I'm going to wrap this up. If you have any questions, please don't hesitate to get in touch with IC Markets. Ask them to help you with your accounts or your platform. Again, if you have any questions, my email address is here. So if you need anything to do with the recording or anything like that, you can contact me on this. Okay, and you can message me with that. And that's it, ladies and gents. Thank you so much. It's been a wonderful evening. I love my webinars with you guys. Again, don't be shy. Bring in your questions anytime. And I look forward to seeing you in future webinars. Thank you very much. Have a good week, guys.